My first flip in several years, which I dubbed the strip and flip, was a complete flop. Hi, I'm Megan. I love investing in real estate even when it doesn't go so well. And today I'll tell you about my big flop. I'm going to share what happened, what steps I took to mitigate the losses, and a bunch of lessons that I learned to make my next project even better. Before you watch this one, if you'd like, you can go watch some of the other videos I put out about the strip and flip when I first introduced the project, and some walkthroughs along the way and updates on my budget. And then in this video, I'll give you the final numbers and of course the lessons learned. Let's get started. All right, so some background and the numbers on this project. This is a single family home that I bought from a wholesaler who I know and trust in the area, and it's in a really great area of St. Louis. It's a super desirable neighborhood, very central, great school district, all the things that you look for in a single family flip. Here's the breakdown of what my projected numbers were. I bought the property for $205,000. I expected closing costs to be $6,900, renovation to be around $80,000. I found out pretty quickly, and I updated you guys on the fact that that was already ballooning. Holding costs of about $12,600, so that's between insurance, tax costs, utilities, and my financing costs. Sales costs of around $11,350, and I believe that my sales price would be around $350,000, maybe even a little bit higher because the market was really hot in the area at that time. So my projected profit was going to be somewhere between $30,000 and $40,000. Sounds pretty solid. Here's how it actually looks. Yes, I bought the property for $205,000. My closing costs were, as I thought, around $6,900. My renovation costs, though, grew over 20%. My final renovation cost was $96,451. And again, I have a video where I walked through all the elements of that budget. My holding costs also went up because I ended up holding it longer than I thought. I was thinking I could get this done in 4, maybe 5 months. It ended up being more like 7 months. So that was $19,158 in total holding costs. That was about a 50% jump versus my expected holding costs. And then finally, I wasn't getting offers at or even very close to $350,000. In fact, one of my best offers was in the low 300s. I did eventually have an appraiser come out, and he appraised it at $320,000, which was way off versus what I expected and what many of my investor friends expected. So I was about 9% off from that $320,000 appraisal that I got. So all this comes together to say that I'm gonna lose about $19,000 on this deal. So what did I do? I could have just taken it on the chin and lost that $19,000 and moved on, but there were a couple things that made me decide to do something a little wacky. So I have 2 kids. In my last home, their bedrooms were connected. It was this old bungalow home with an addition on the back that made the 3rd bedroom. This home that I renovated, yes, I'm sitting in the former strip and flip right now. It is my new home, had a better layout, and it had a finished basement, and it had all the aesthetics that I find pleasing. So guess what? I moved in to the strip and flip, and I turned my last home into a midterm rental. So I really turned lemons into lemonade on this one. It was a little bit of a rush to get out of my last home into this home and set up the midterm rental quickly enough, but I had the midterm rental leased before I was even moved. So that was great news for me to know I was gonna have someone coming in there quickly and that property would cash flow for me as I moved into this property. I also have the benefit of having been in the Marine Corps in the past, so I am a veteran and I can get the VA loan on my primary residence. So I'm refinancing this property for the 100% of the value, which means I don't have to leave very much in the property at all to move in here and have it become my primary residence. And finally, because of the property having a separate entrance for the basement area, if I want, I can midterm rent it to a travel nurse or maybe short-term rent it occasionally on Airbnb. There could be an income producing aspect to this home if I decided I wanted to make some additional money from this property even as I live in it. So this is maybe an extreme example of how to mitigate loss, and not everyone would be ready to up and move if something like this happened. But for me, it really made sense. It was less than 5 minutes from my current home. It didn't change where my kids went to school. I was still close to all my family and friends, and it's a beautiful home that I just redid. So kind of a crazy story, but that's what's happened with the strip and flip. And my last home is now a midterm rental, which I'll be sure to update you on the progress of that as well. So I have a few key lessons learned from this entire experience that I want to share with you guys. First of all, be aware of how delays can affect your sale price. So one of the reasons that my costs expanded, I had to pay more in holding costs, and I didn't hit the market at the peak time to hit the market, was because of rain delays. I was adding an egress window to the basement to make that fourth legal bedroom, and the rain just kept coming this summer, and it really delayed my entire timeline. I couldn't get on the market until that was finished. So that pushed me outside of the prime selling season just a little bit. It also meant I was holding it longer in general, which increased my costs. You can have some really big swings in how much you make on a property with delays. So make sure you're thinking about that and you're running your numbers with some of those worst case scenarios in mind so you know what kind of the bottom end of what you might make would be. My next big lesson learned is make your plan specific to the area, the type of property, the strategy, and so on. So let me explain a little bit of what I mean by this. This particular property is in what's overall a great area, but it happens to be just slightly cut off from the rest of the neighborhood. So there's kind of a main road that you have to come on to enter this area of the neighborhood. And then there's not really many other outlets. And I was actually really surprised because it's still a great area in the great school district that's really central. But there were a lot of people who said they didn't like that there was only one way in and out of this particular couple of streets in this corner of the neighborhood. So I think that really actually affected my after repair value. On top of that, this property is a slightly older property. It's 1960s. So it's a little on the smaller side. Bedrooms are a little bit smaller. There's not like a formal dining area. And in my mind, that's not a huge deal because I'm kind of casual about how I dine. I have a ton of rental properties that don't have formal dining areas or have smaller bedrooms, and it's not a big deal, right? Well, in this particular area, at this particular price point, it is. So I was obviously not adjusting my mindset from the long-term rental mindset to the purchasing mindset in this particular price point and this particular area. I need to make my plan a little more specific and think a little bit through who my customer, who my end buyer would be. And I was a little stuck in the rental mindset, I think. And then finally, strategy. So again, this was a flip, and this property, I probably could have made really good money on it if I didn't go as far as I went on the flip. If I had done something that was a little more, obviously it needed some decent work, but a little more on the pink carpet side, rather than opening walls, adding an egress window, making it a 4-2, I probably would have done better spending a lot less on the renovation and selling it as a 3-1 than trying to make it into this 4-2 at a higher price point. The next key lesson learned is really related to the last one I just talked about, but I want to say these words out loud. Beware of weird properties. As I said, this property doesn't have a formal dining space, and it's in this kind of interesting little area that only has one way in and out, kind of cut off from the rest of the neighborhood over here. So those two things I think made it kind of weird for the area. Yes, there are other smaller properties in the area that don't have dining spaces, but those properties also weren't converted to 4-2s that would have sold for much higher if they had the dining area. Again, in some ways, this property was already a little bit weird because of the access, and then I probably made it even more weird by adding the bedroom and bathroom and making it this bigger kind of family home that didn't have a formal dining area. My final lesson learned for this property, and it's one I've always known, but I like to reiterate it, always have a plan B, and maybe a plan C, and possibly a plan D. It's really good to know what options you have and if there are multiple exit strategies before you get into a project. As I said, my particular way of getting out of losses on this property is pretty extreme. Most people don't want to move into their flip if it doesn't go exactly to plan, but I had some benefit to myself for making this move. It's a better layout for my kids. I have a little extra space in the basement. I now have a guest bedroom, which I didn't have in my last home. So it's actually working out for me. That's a pretty extreme example. Your plan B might be renting it out as a long-term rental. That wouldn't have worked for this one numbers-wise, but this one could have actually made a really good midterm rental. I just decided I'd rather turn my last home into the midterm rental instead. So it could be another strategy. It might also just be having backup funds somewhere. I always have some funds somewhere that I could pull on if I want to or need to. I didn't want to have to just shell out the $19,000 this time, which is why I chose the other backup plan, but have backup plans because you're probably going to need it at some point in the real estate journey. So there you have it. The very real ugly truth about how the strip and flip turned out. A beautiful product, no money made yet. I still might try short or midterm renting that basement. We'll make it the strip, flip, and double dip. Let me know in the comments what questions you have. As you can see, I am an open book. These things happen sometimes, and I'd rather share with you so you can learn from them. And hey, maybe you'll have some that you want to share with the rest of the community as well. Like, share, subscribe, but most importantly, keep learning, keep growing, and have fun.